I'm Sarah Borkson-Keto here in Dallas for NAREIT's REITworld 2017. I'm joined today by Sherry Rexroad, Chief Investment Officer at BlackRock Global Real Estate Securities. Welcome, Sherry.
Good morning.
So as you look at global regions in late 2017, which areas do you think are most stable for investors?
Well, let's take a little walk around the globe. So if you start in the UK, I think that the uncertainty surrounding Brexit continues and is impacting both fundamentals as well as valuations. Europe, I'm much more constructive on. The growth there that was so slow has been accelerating, and we're seeing particularly good demand with very little supply in the northern parts, Germany, France, the Nordics. I'm a little more cautious on the south due to, obviously, the political events, debt levels, and productivity issues. When we go into APAC, I think that Japan is clearly seeing the best economic growth it's had since, well, in decades. And in fact, they've now had 6 consecutive quarters of GDP growth. So that's a positive, and it's having a very strong impact on the office fundamentals. Australia is stable, but you have to remember that the largest stock there is Westfield, so it's facing the retail headwinds that we're seeing globally. And then Hong Kong and Singapore are always more volatile. So if people want stability, that's probably not the place to go. And valuations are up quite a bit this year in the public market. So I think that would be the least of the stability markets that I would offer.
And how would you compare the level of transactions in the US compared with regions outside?
It's interesting. Transaction volume in the US is still very high on a historic basis, but relative to last year, down. Prices are stable, and industrial is leading in both volume and pricing. When you look into Europe, volume there is up, particularly in the gateway cities, and prices are up. That's the first time since 2015 that they've seen that kind of growth. In APAC, growth is much more modest, in the 4% range, but one would expect that given the ownership structure there. You typically have long-term domestic owners that turn over their properties very rarely, so it brings down the total transaction volume. Something that I think is very interesting to note is that retail transaction volume globally is down. So in the US, it's down 20%, and in Europe, it's down 15%. So all of these negative headwinds that are in the news, we really don't have as much price discovery in the private markets as we'd like. So the stocks in the US, for example, are down 15%, and we're off more on a year-to-date basis. We really don't have the data yet to see what the true valuations are in the private market.
And as you look at 2018, what are some of the major trends that you'll be watching?
I always follow the macroeconomic data, job and wage growth, GDP, monetary policy, etc. But of course you have to add to that the US tax reform issues and political events in Europe. But unique, I think, and growing in importance are disruptive factors. The e-commerce is the obvious one. You see the positive in industrial and the negative in the retail. But think about cloud growth and the impact to data center demand. And those stocks are showing it. They're up very strongly this year. Think about Airbnb and the OTA's impact on lodging. WeWork and remote working, and the likes of Google impacting office densification and design. But in all of this, our job as public investors is to look at the fundamentals and overlay the public market valuations, because the pendulum always swings too far. And therein lies the opportunity.
Great. Well, thank you very much, Sherry.
My pleasure.
And for more news and information about REITworld 2017, be sure to visit REIT.com.